Hello, hello, good afternoon. We are here today again on a Thursday in our fourth episode of a series of episodes that we're doing. What's the name of the series, Denise? I forget.
Senior services as related to real estate and other stuff. We're doing
Okay.
a just an educational series on some services that are available to seniors, just to educate the public and see if we can help in any way.
And today we are broadcasting on 3 channels. We are on my Facebook. You find me as Sandra Roman Real Estate. We are on my YouTube channel. You find me as Sandra Roman Real Estate too. And on Denise's Facebook page. What is your page, Denise?
Denise Lanzarone, your local realtor. So
what else can they find
it's
you?
live on my page right now. So, yeah.
Remember to subscribe to my YouTube channel, to like, to comment. If you have questions or anything, leave us a comment, and to share, to like, and that's it. Ring to the bell on YouTube. Today we have a special guest that we already have it here with us. He is John Trauma. Is that your
Yes.
last name? Trauma? And he is tell me about yourself.
well, thanks for having me, ladies. My name is John Trauma. I'm from Homebridge Financial. We are a full service mortgage lender. Company is actually based out of New Jersey, but I operate a branch out of Melville, New York. And I've been doing this a long time. I've been doing it for over 20 years. I've worked for retail giants like Wells and Citi. I've been a mortgage broker and now a direct independent lender with Homebridge. And it just gives, I believe, clients more reach. I found when I was working for the large lending institutions, you're confined to what those banks can offer, and that is it. And then as a broker, you're also limited to what institutions will accept loan packages from brokers. So I find that being an independent mortgage banker is just a little bit more flexible and gives really a client everything that they need. And as far as products that we can help you with, or just traditional loans for purchases, we can do home equity loans, we can do reverse mortgages, we can do renovation loans, first-time home buyer programs. So whatever it is that you need, we have access to.
Where can they find you? Where, if somebody's interested in some of the services that you have, where can they find you?
I think the easiest place to do is just Google my name, which is John, John, last name Trauma, Trama, and my company website will be available.
Okay. And Denise, where are you on
right
social
here.
Media? No, but on social media.
Okay. Facebook, Instagram, LinkedIn. Just Google Denise Lanzarone, and all those social media sites come up with my name. So you can find me anywhere there. I'm a senior real estate specialist, and that's why I try to run this series to educate people on some services that are available that they might not know. So that's all we're doing here. Pretty informal. So we're glad you can. I see we have a couple of people watching, so I'm glad whoever's there is there. And
say hi.
You can watch the recording after also. And send us some comments, what you think and what else you'd like to see. We have a few more in the series lined up. We have a patient advocate lined up, and not sure who else, but I think that next week was a patient advocate, which is good, which I didn't even know they existed. So that's a good service that somebody might need. So John, tell us a little bit about what services you can offer our seniors.
Okay. Well, I think one of the biggest ones is the reverse. The reverse mortgage is a great program for for seniors. I even gave one to my own mom at one point. There's a lot of misconceptions about the program itself, so we'll dive into some of those as well. But simply a reverse mortgage is just a mortgage that works in reverse fashion, right? So normally you would make a mortgage payment and your principal balance would come down. In a reverse, it works in the opposite fashion. So as you don't make payments, your principal goes higher each month. But the beauty part about it is it just gives you a lot of flexibility that you might not have considered otherwise. Obviously, if you did not want to necessarily move, maybe you wanted to hold off on selling your house, this is a great way to alleviate most of your monthly obligations. Obviously your mortgage first and foremost, but you could also pull additional equity out beyond paying off your mortgage to maybe consolidate debt. So that's a way to keep you in there a little bit longer. But you can also use a reverse to purchase a new home. It could be a secondary home. It could be just obviously you're going to sell and buy, but you could use some of the proceeds, not all of your proceeds from your sale, to purchase. So it just gives you a little bit of some wiggle room. And as far as the actual program itself, we only qualify you based on your age and the equity position in your home. So we don't look at income. I know that's always a concern for people, that they feel that they don't make enough money to qualify for a reverse, and that's not the case. You don't have to worry about that. Credit is really not that important either. Really, we're just looking to make sure that you have some income coming in to make sure that you can pay for your taxes and insurance. But the way a reverse works is, again, there's no immediate payments that you have to make on the loan that you take out. There's flexibility with interest-only payments. You can make actually a full amortized payment if you wanted to, or you can make no payment at all. So it really does give you that flexibility that I was mentioning earlier.
And what are the requirements? What's the age requirement?
So the requirement is 62 years of age. Okay. And depending on how old you are, it will determine how much money they will give you. Obviously, the younger you are, the less they will give you.
So up to, you start at 62, and if I'm 75, I get more than if I was 62.
62, that is correct.
Okay.
Yes.
Okay.
100%. So just to give you some basic characteristics, as I said before, flexible monthly payments. You can maintain your title and home ownership. So if you're finding that maintaining your home is a little bit too much, this gives you that ability. It's tax-free money as well. So when you pull this money out, you're not getting taxed on it. So that's important. It also doesn't affect Social Security or Medicare. And as I mentioned before, lower income and credit requirements are minute. So there's really never a concern there. And also this is a non-recourse loan, which means that the borrower cannot own more than one home value at a time. So that's important. And the other thing is that, I think people always feel that, well, if I do a reverse mortgage, does that mean my heirs won't get the house? And that's not the case. So as long as there's equity in the home, after something should happen, that will be passed along to your heirs. Usually what would happen there is, if something was to happen, you have to notify the bank that something has happened, and they will give ample time to the heirs to sell the house or refinance the house. And that can be as much of, I would say, up to 12 months that they'll give you to work it out. Oh. So you never have to be concerned about losing your home.
Okay, so I'm the question. Let's start with questions.
Yes.
Let's say, for example, my mom wants a reverse mortgage. What's the first step for her to do?
Well, the first thing is to have a consultation, so she could reach out to myself, and we can just ask some basic questions just to make sure that obviously they're of age, what their needs are. What are they looking to accomplish? Are they looking to just pay off an existing mortgage? Do they even have an existing mortgage? Are they looking to just supplement their cash? There's a lot of different ways that you can structure a reverse. One is that they can give you a large sum of money up front. Okay. Another way is they can give you money in installments. So let's say you just needed $1,000 a month just to kind of keep your head afloat. That can be an arrangement where they send you money every month. or you can even do it in the form of a line of credit where you just draw on those funds as you needed it.
As you need it.
Yep.
And that's based on the equity of the house, correct?
It's based on your equity and your age. So the more equity you have, and the older you are, that'll give you the most money that you can get. Obviously, the younger you are, they won't give you as much. It's also available on all types of properties, whether they're single families, condos, multifamily, PUDs, townhomes. So it really doesn't matter. It just has to be your primary residence.
Okay. That was going to be my question. It has to be your primary residence, right?
Yes.
Okay. And there's a misconception out there that you're going to lose your home. I know that a lot of people say that well, I'm going to end up losing my house. And I know that's not true. So
it is a big misconception out there. And as I mentioned earlier, I did one for my own mom at one point. And, look, I mean, I come from, from my perspective is if I have the ability to help make my parents live more comfortably, that's my main objective. Me getting a little bit more equity out of their house at the end of the day doesn't mean anything to me. So it was just something that we came together and made an agreement that we would move in this direction just to make it simple, for them, as they got older. So it's a great opportunity. It really is. It's just another option for you if you didn't want to hit your, let's say, your retirement money. Maybe you wanted to prolong your Social Security to maximize that. I mean, there's a lot of reasons why you would opt for a reverse over using, supplemental, monies from retirement plans or like I said, or Social Security. So this is just another option, and it's worth just inquiring about it. And there's no risk. And I think a lot of the myths that most people find themselves thinking will be debunked very easily.
So, how would you compare this to just taking out a line of credit that you can take out based on the equity in your home?
Well, a home equity loan is definitely a good option, but the issue with a home equity loan is, again, you have to qualify for it, right? So, and they're going to ask you for income verification, so you will have to. You'll have to do a formal, approval. Whereas, this is a little bit different. They're not really looking at your debt to income ratios as they would on a home equity loan. Right. And you're going to be making payments, whether it's interest only. That'll keep the payment as low as possible. But if you opt for a fully amortized home equity loan, where it's fixed over a certain period of time, those payments are going to be a little bit higher. And the only other concern with a home equity loan too is that a home equity line of credit is that the rates are variable. So there is that component of risk there. But again, every situation is different, and I think it all comes down to is a preference where the client is at that particular time, and then we kind of go through these things and figure out what is the best option for them.
Right. So the best thing to do is to have a little consultation with you and figure it out.
Yes, 100%.
Okay, good. What other questions you got, Sandra?
How do they pay back? That's my other question.
That's a great question. So, as I said earlier, I mean, they give you flexibility, so you can opt to not make any payments towards it. You can make interest only payments. You can make fully amortized payments. You can go back and forth. It's really a matter of again, what the preference is of the client. But let's just say, for argument's sake, you take a reverse mortgage and you have it for 10 years. You never make a payment on it. Okay. When you go to sell that house, that's when that mortgage becomes due. So whatever proceeds you're going to get from the sale, you have to pay off the reverse, and then whatever's left over would go to to the seller or to their heirs if they had deceased.
I have another question. How long is the mortgage? Is it 5 years, 2 years, 3, 10?
No, it's based on a 30-year amortization. But it's as long as you live. They can't kick you out of your house. So let's say a husband and wife apply for a reverse, and let's say something was to happen to the husband. the wife can stay there with that reverse mortgage for as long as she lives. They cannot kick either party out. And let's say on the flip side, worst case scenario, let's say you find that at the end of the day, you actually owe more than what the house was worth because it's a federally insured program. There is no recourse to the homeowner or to their heirs, so they're protected. So it really is just a great great tool for many. It's just a matter of understanding what the facts are.
So if let's say my husband got sick and had to go into an assisted living facility, I could take out a reverse mortgage on my home to help pay for that.
100%.
Okay. And if you had this situation come up with someone wants to sell their house, but they owed more on their reverse mortgage than the house would sell for.
Mm-hmm.
So that, of course, they're responsible for.
Well, no, it would be considered a short sale, and no, they would not be responsible for that shortage.
Okay, I'll have to tell her that. She asked me about that. I said, okay.
Yeah. So you just learned something today, right?
I did.
Yeah. That's awesome.
Now you're the question lady, see?
Questions are good. I love questions.
I'm usually the one with a lot of questions.
What else? What about if my family lives in another state and I'm thinking of buying a second home there? How can you help me with that?
Well, with a second home, again, you can't do a reverse on the house that you're purchasing as a secondary residence. But if your intentions are to occupy that as a primary, that would be a different story. Or again, it's really a matter of I guess the pecking order. The cart before the horse, right? So you could do a reverse on your current residence and pull out the cash that way, so that you can then go buy the secondary home in cash. That's an option for you. Or if you have if you're intending to sell, or you said second home, right? So that would really be the best way to do it. Then I'm sorry, that would be to do a reverse on your current residence, take the equity out of there, and then just go buy that property in cash.
Cool. Okay. Good to know.
That's good.
Yeah. Very good to know. And I know that.
Yeah, because we have a lot of people that are selling their houses here and they're moving to Florida or to North Carolina, whatever. Yeah. So that's an option.
Mm-hmm.
Yeah. So
it's definitely an option.
If you thought that, you wanted to buy a second home in North Carolina and move down there in 5 years, take out the reverse mortgage on your house here, buy that, sell your house here in 5 years, and should be okay. Right? Yeah,
absolutely. Yeah, like I said, there's a lot of different ways to approach this, and with different products. It's just getting an understanding for what your client's needs are, and breaking it all down. The home equity piece is obviously an option, but there's certain limitations that go along with it, and there's limitations with the reverse as well. But I think that there's for some reason, I guess, with all this negative misconceptions that have happened over the years, and there was some things that took place back in the day, but all those things have changed. I mean, everything is done above board. You have to meet with a HUD counselor, which is an independent third party that will go through this program a little bit more in detail with you to make sure that you are 100% comfortable with the product and what you're going to move forward with. So it's not you're just a loan officer that you're speaking with. So they really want to make sure that you understand the program moving forward.
That's great. That's great. Even Tom Selleck is trying to sell it on TV, right?
Yes, that is true. I saw that. That's funny.
Another thing that could help seniors, if they still have a mortgage and their rates are high, their interest rates are high. Right now, the interest rates are pretty low. So talk a little bit about refinancing.
Yeah, I mean, refinances are always an option. Obviously, people get into credit card debt And a great way to utilize your equity in your home is through debt consolidation, which would be a refinance. So that's always an option. But going back, maybe the reverse is the option. So you can do that as a refinance with a reverse, pay off your existing mortgage, whatever credit cards you have, right? And then have no monthly payment to worry about until you decide, what it is that you want to do in the future. So, but yeah, refinance, debt consolidation is fantastic. Rates, even though they're up a little bit, still in the low threes, and historically one of the lowest that we've ever seen. So definitely a great time.
Yeah, I think ours was maybe 10% or something when we bought our house years back.
Yeah, but I'm sure you only paid $50,000 for it, Denise.
74, John. 74.
74, really?
Actually, we assumed a mortgage at that time.
Did you really? Wow.
Yeah, we did.
You don't see that happen too often.
Yeah. But
74?
a long time ago.
That was expensive.
Yeah. Yep. Okay.
Any other questions?
I have one.
Yes.
Of course you do.
Can you tell? I always want to end up with a nice story. Do you have a nice story, a successful story that you work with somebody that was a happy ending?
Well, again, I mean, I'm a happy story. I mean, they're all. Listen, I like to think that all my closings are happy, right at the end of the day.
But one that really got you, that it's in your memory, that it stand out.
Well, I think
other stories.
Well, I think. Listen, I personally like the more complicated, complex, files that come my way, because those are the most gratifying. Breaking it down, figuring out how to work through them, and could be a little bit of credit counseling for some people. It could just be structuring a loan in a way where they may not have been told before, or they didn't know before speaking with me. So those are the types of loans that are dear to me, because at the end of the day, everybody has a 30-year fixed, and everybody can do the standard loans. It's the first time home buyer stuff, the grants that are available. People come to me as a Hail Mary when loans go belly up, and those are the ones that I really appreciate, and give me that appreciation for what it is that I do.
That's good.
That's great.
That's great.
I remember when we came to you years ago, we were trying to refinance and had an issue with verifying our debt, our income, since my husband works for himself. And I think that, and you really helped us out with one of your loans that we didn't need to verify income with, and we were able to refinance and consolidate a couple of mortgages, and worked out great for us.
Yes, thank you. Well, there's a lot, and there's a lot of creative financing options that are out there, aside from what we talked about today. For people who are self-employed and don't show the income that they earn. You know who those people are. But at any rate, we have bank statement programs. We do have no income verification loans. Again, a little bit out of a premium, but they're out there. They do exist. So there's a lot of flexibility for financing, even for investors, where they don't have to show any income. We just look at a debt service ratio on the property that they're looking to buy, and as long as it's positive, we don't need any verification of income. So there's just a lot of great resources out there, and that's why I said to you earlier, working with an independent banker gives you that flexibility.
Yeah, it's awesome. It's great.
Super good. So thank you for being here today, I guess.
Thank you for having me.
It was super fun having you here. Please tell us again, where can we find you?
Yeah, my phone number is 631-255-0849. And my website is just my name. Just Google me, John Trama, Trama. That's just the best way to find me.
Facebook?
I do have a Facebook page, but what it is specifically, I couldn't tell you.
Well, Denise, where can they find you?
Oh, you can find me anywhere. Just Google Denise Lanzarone. I'm on Instagram, Facebook. My Facebook page is Denise Lanzarone, your local realtor. I'm on LinkedIn. So you can find me all those places.
And then you can find me on Instagram and Facebook. I'm Sandra Roman Real Estate. And on YouTube as Sandra Roman Real Estate. Give like this video, ring on the bell if you're on YouTube, comment and share this information, please, to whoever you think it might be helpful to, because that's why we're doing this, to help people, to put information out there, because we found out that we couldn't find any information for seniors. So if you have a senior in your life and don't know what to do, share. Or if you know somebody that has a senior in their life and need information, share this information with them. And we see you when is the next one? Or number 5.
Number 5, same time, same place. Well, I don't know what place I'll be in, but same time, Monday at 4:00, and Facebook live event. You can find us there. I mean, you could always, if anybody has questions or comments, you can message us on Facebook or Instagram, anywhere.
Oh, and there's a link for a manual. We're putting together all the information from all the episodes and all the guests that we already had. We're going to put together all that information. So if you want the information, just leave our name and your email so we can send you that manual all together.
Yeah, the manual is going to have all the guests' information in it, so it's an easy place to access. If 6 months from now you say, "What was that guy's name again?" and you can look it up. So
you can look it up.
Great.
So
thanks a lot,
we're gonna
John.
put it together.
Well, thank you. I appreciate the time.
All right, we'll see you guys next
amigos.
week.
Bye.
Bye.
Bye, guys.